Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for July 13, 2008. AccendoTraders.com, effective trade plans delivered daily. And I obviously want to take the time to thank those people. People were sending me emails. Michael, what's going on? Where you at? Where's the weekend update and what's going on there? Obviously, you can purchase a subscription and get the daily flash version so that it's obviously the full version is also a podcast version. But I took my family to Myrtle Beach for a week last week, and the internet connection I had there was just atrocious. So I tried all week to upload to YouTube and Gather and MySpace, all the places, tried to upload the video, but it just wasn't happening. So, I just had to release and had time with my family. So I'm still around. I'm glad to see the people value the videos that we put together, both on the free side and on the subscription side. Fortunately, this technology wasn't being my friend. So this week was certainly a roller coaster week. All the indexes ended down, but they didn't end down too much. Not too much. Down 188 for the Dow, 23 S&P 500, Nasdaq down 6. So Nasdaq's showing a little strength there actually. The market, as I said, roller coaster all over the place. There was some more ongoing concerns about the financial sector with Freddie Mac and Fannie Mae. Obviously, the oil prices were driving the market. And then we even have the rebirth of merger and acquisitions. We used to have merger Mondays, but haven't had that in a while. So going back to our financial sector, we had that roller coaster ride that was Freddie Mac. Is there enough money? Is there enough capitalization? Yes, there is. No, there's not. The government's going to bail you out. If the government bails out Freddie Mac, these two companies, the stock basically becomes worthless. On Friday, the New York Times published an article about the government takeover. And just in 1 week's time, both companies were down over 60%. I believe even 70% for one. So certainly that really drove the market there. Again, with our corporate news, we had Dow Chemical announcing that it's going to acquire Rom and Haas. The battle for Anheuser-Busch, our American icon, continues, although it looks like it's finally going to actually happen around $75 a share, something around there. Walmart led the better-than-expected retail same-store numbers. There's that stimulus package. And Alcoa and General Electric kicked off our new earnings season. Both of them had inline profits. And I believe GE is going to be spinning off its appliance division, certainly to raise a lot of money there. On the economic front, not really much going on there. There wasn't a lot last week, not a lot going on this week. Pending home sales dropped. The good news was that the trade balance did improve. I believe it was down from 46 million down to trillion, hit to 46 to 43. Oil continued to rule today. We had wide swings this week from lows of 135 up to highs of 147. However, we basically ended unchanged right there around 144. And this week, again, we don't have a lot going on, but please take note that we do have the minutes from the FOMC last policy meeting. Again, we're looking for any language change. That's the only way they're really going to impact. If there's any language change in those minutes, then certainly can move the market. And of course, they were talking about the downside risk had lessened, so it should be interesting to actually see what they have down there for the full thing. So tomorrow, we don't have a lot going on tomorrow. Again, FOMC minutes are going to be released on Wednesday. We got a bank tomorrow before open, Novelis after the close. Not too big, but again, since now the earnings season is kicking back in, you can see we've got Railroad, eBay, Ford, JP Morgan, Nucor, Google, Merrill Lynch, Citigroup, and IBM. Just a bunch of companies coming out this week, so earnings are coming back. So hopefully that will be the catalyst to move us one way or the other. But for Monday, we really don't have much, so we'll see. Maybe Tuesday we'll start kicking in with some market-moving news. And here are our continued split plays that we've been watching. So let's go ahead and take a look at our sectors for this week. Alright, as we look at our sectors, you're going to see several of them are going to be basing out here. This pattern you're going to see is a retracement and a pull down to support. So hotels bearish, basic materials, retracement of moving average, could fall from here, bearish. Utilities, I'm going to go bullish, broke higher above the moving average, so I'm going to go bullish. Builders, bearish. Casinos, bearish. coal. I like the fact that they bouncing here at the uptrend line that they have long term, and if they can break above the moving average, they're going to go bullish. So I'm going to put them in the bullish category. A little bias there. Chemicals, retracing moving average and falling, bearish. Steel, same thing, bearish. Railroads, bearish. Banks, bearish. Biotech's in a consolidation mess. Drugs, this was our sector last week. It was bullish. Pulled back a little bit on Friday. I'm still going to leave them as bullish. Internet, bearish. Again, retrace, falling. Bearish on software, stocks, gold in between. Insurance, bearish. Oil, services, kind of consolidating. Retail, bearish. Stocks, bearish. Transports, bearish. Brokers, bearish. Natural gas, consolidating. And oil, bearish. Okay, and as we finish up our video for this evening, we're going back to our book, Trading in the Zone by Mike Douglas, and we're in Chapter 3, Taking Responsibility. And the section that we're now entering is reacting to a loss. And, you know, he obviously starts off with the most important thing, and, you know, this may be the most overlooked thing, and that is, it is inevitable that you're going to lose. I have a brother who is the smartest person that I know. You will not win an argument with my brother. You just will not win. But, you know, trading is not working for him. And I think it's because he's so analytical and he's so smart and he's so, you know, he's a programmer. He's a director of a huge company. I'm very proud of him. But I don't think he can deal with the fact that he can't control the environment. And so, you know, it's inevitable that you're going to lose. There's too many things going on there. The market's too erratic. There's so many variables. You will lose. You will lose. Even as we identify chart patterns, even as we look at our technical indicators. Well, what's different is, for every trade, the individuals involved usually, if not always, change. And so when you see this new falling 3 pattern, rising 3 pattern, whatever, and it's a stock that you've learned a heartbeat of, we now have new traders involved, and you don't know what that trader on the other side, what they think is a good price or a bad price, and they don't know what you think is a good price and a bad price. So, you know, it's inevitable that we are going to lose, but the key to losing is to make our winners home runs and to make our losers singles. But we'll get more to that later. So, as a novice trader, you have to ask yourself, well, how do you respond to that loss? Are you going to recognize that, you know what, I win some, I'm going to lose some? Or are you going to go to that personal vendetta? And this is a good moment. If you guys did not go back and look at the video from last week, I shared in this portion a great article, Why the Market Hates Me. My good friend Dean once again came through. I wrote something and he kind of fine-tuned it. So thank you, Dean, as always. But why does the stock market hate me? Great article talking about personal vendettas. And so obviously, to tie this back into what we're talking about, you know, what is your mindset? Are you win some, lose some, or is the market out to get you? And new traders, if they haven't developed the right mindset, experienced traders, if they haven't developed the mindset, can feel like the market is out to get them, can feel like the market has a vendetta against them. But we know that that's not true. The market is what it is. So as adults, we have to learn how to develop this right mindset. We have to learn how to kind of, you know, get out of our childish mode of when bad things happen with us and look at it from the, you know, perspective of, again, developing the right mindset and understanding that when we have losses, yes, that might mean we need to tweak our system, but in overall, it just means that it didn't work this time, and let's move on to the next thing. Let's move on to our next trade, because tomorrow there will be a new opportunity. And will you let that emotional pain blur that opportunity so that you can't see it, or will you move on and let that opportunity enact upon that opportunity? So here we go. To get the full version, the podcast with our picks for the week and with our summary of the markets, and obviously again our new plays, go get our podcast. If you want to get subscribe to our series, There's our link, accendotraders.com/landing video trade plans. And again, that is to get our Monday through Friday videos so that you can be with us each day. And we're glad that the subscriptions are continuing to grow, so thanks for all those. And again, thanks for those who sent the email. And obviously, we love the feedback, so we know what type of people are subscribing to both our YouTube and our regular subscription service. And again, why the stock market hates me, blogs at accendotraders.com. That's where you can find that, blogs at accendotraders.com. A great article on why the stock market hates me. As always, trade your own risk, and I will see you guys next time.